So where's Apple headed from here? We got to turn to the charts here. And Chris is here to break it down. Why don't you head over to the plasma, Chris?
Yeah, I think when we look at the response of the stock after hours, it speaks to how low the bar was heading into it. And what we want to focus on here is one number. That number is 215. Stock trades 218 right now, so we're through that key 215 level. But when we zoom out and take a look at where this stock has been over the last couple years, that level, 215, has been this midpoint. It's been that line in the sand. No price progress made on Apple for the better part of the last 12 months. What we have had, we had a 40% decline here, and we had a 20% down market there. So how does it respond to here? Well, if we look at the chart with some lines, we're now pushing up and out of this resistance that's been in place for the better part of the last 12 months. Getting up through 215, we think you conservatively make a run back at the old highs, 233, and maybe even challenge that 250, 260 range. And what I think is compelling about the name from a sentiment standpoint, these are the buy ratings on Apple. Right now, you have the fewest number of analyst buy ratings really in about 10 years. So the bar was low going into this. I think the response of the stock certainly reflects that as well. So what else can we own that captures this team? How about things that sell into Apple? Analog, ADI, great example. This was a stock that peaked first. Frankly, it bottomed first late in the fourth quarter last year. It's making new absolute highs, new relative highs. Semis have been very strong. We think this is a leader within that group. And I would highlight Micron as well. It sells into Apple, a stock that peaked early in 2018 before Apple did. It bottomed first. It has just started to break out above that really important level, about to make new highs here. So when we look at the message from Apple, I think it says, or I think it speaks to, own the ecosystem as well. Micron, ADI, all speak to that.
All right, Chris, why don't you come back over to the desk here and let's trade this ecosystem. It's always been tricky to own the suppliers or to view the suppliers as any sort of indicator for Apple. Where would you stand on owning the chain?
Just being at Apple. Right.
Just being Apple.
Right. If you want to own Apple, I just want to own Apple. Make it simple.
ADI reports, I think, on August 21st. I think Piper just raised their price target to 135 or so. It's not a cheap stock, 22 times forward, 30 times trailing. However, what Chris just said, I mean, this is a stock, given what Apple just said, that might continue to rally into earnings. So once again, if you're looking for a name that might have some tailwinds into their earnings release, ADI might be the one.
All right, let's get back to Josh Lipton. He's got some more news here on Apple. Josh?
Yeah, so Melissa, some news just here on the Apple Card. Cook saying that is being tested, beta tested by employees right now, and that the rollout will happen in August. No hard date here on the call that Cook is offering, but he says it will happen in August. Of course, this is this high-profile credit card partnership between Apple and Goldman, and it's another service for the iPhone maker, Melissa.
All right, Josh, thanks. Josh Lipton with an update on the Apple Card. Looks like a rollout sometime in August. Will this help the services business?
It's incremental. It's not going to be a game changer, but when you look at all the components of what services are, it's an offering that really we haven't, all those announcements haven't really been part of these service numbers yet. And these are service numbers that are getting better and better. I also think on wearables, if you read the numbers here, it says that over 75% of the people buying an Apple Watch they were buying it for the first time. And wearables, again, is a multiple that I think is very important for services because it gets you into healthcare and it gets you into all the components that Tim Cook, I think, are really the things that he is driving at Apple, and I think it's very exciting.
I want to get back to this point that Gene was making, which I thought was really interesting about the valuation of Apple and comparing it to another consumer staples company, and he said Coca-Cola. Guy Adami, would you make that comparison?
No, I think it's fair. I mean, I can understand what Gene said. I wouldn't make it, but Gene's the analyst. I'm not. But he said somewhere between 20 and 25. So I can play the math game as well. So if you give him 22 multiple off next year's earnings, which is, I think, $12.50 or so, you're talking about a stock that can go anywhere from $270 to $275. And I think that's probably, in terms, I don't want to speak for Gene, but that's probably right within his crosshairs for the name.
It's just hard to think about in history a stock that's been this important peak with a multiple of 17 times. You go back in the annals of history, you can't find reasonable valuations in your market tops.
Did Sony never, when they were the hardware king? I don't know.
I mean, if you look at the valuations of Japan in 88, 89, they were extreme, right? The valuations of tech in 99. So it's just hard for us to fathom that this is a market cycle top or an Apple top with a valuation of 17 times. And if this is all about China, everything related to China here is actually acting better. So I think the message here from Apple starts to confirm that as well.
Well, if you, first of all, the installed base continues to grow. So as you get into that was an announcements from this quarter that's very bullish. Again, if you want to get this consumer product story and kind of talk about it just as a CPG company, if you think about where you're valuing the hardware, it gets back to. So, Nokia, you can make an argument, and it used to be my girl. It basically traded at about a 14 times multiple in its heyday. So when people are doing their blended multiple on Apple hardware, they're not going at a 14. They're going at an 11, and they're going at, I think, a much more conservative.
And you went at 8.
But yeah, well, the most important thing that hasn't been talked about is the financials, the balance sheet, the ability of this company to grow earnings. Independent of some of these dynamics, it's going to get you at almost a 15% CAGR.